Hello viewers, welcome to my channel, Sensor 360 Investor, where we leverage best practices from around the world and the companies we invest in order to master the investing process. Investing is a complex process and is multifaceted. The Sensor 360 approach to investing is to integrate these disparate processes into the holistic and coherent method, which will enable the retail investor to create a framework for investing. Okay, quick word about the channel. The channel is not providing financial advice. This is the disclaimer. So if you want to pause, read, and then continue, that'll be great. Okay, so without much further ado, let's take a look at today's topic. This video is going to cover stock analysis, and we're going to take a look at Amazon. And the data study was yesterday. Videos being produced the day after. Okay, so let's begin with the company. We'll take a look at the business description and how it makes money. Starting with the business description. So Amazon is a company, obviously, pretty much everybody is familiar with. So we all know it's a behemoth online retailer in the e-commerce space. It's probably a giant in terms of its footprint and market penetration, not just in the US domestic markets, but it's got a pretty large international presence. It has multiple areas that it transacts business in. It's got the e-commerce online retail business. It has a web services cloud business. And it's also, since then, migrated back into traditional businesses like groceries through its Whole Foods assets. And then in terms of how it makes money, so some of the things I just covered, obviously, that's those are the different segments, but let's take a quick look on the first segment, online e-commerce business, which is centered around its Prime subscription and customer base. And Prime is obviously a catalyst for the company, as it provides a marketplace, a method for them to upsell, cross-sell. And it also provides a marketplace for the sellers, which it takes a cut from their sales. And then of late, it's getting more into artificial intelligence through the usage of Alexa, and uses Alexa and AI to cross-sell products. There's from its roots as being a bookseller, and when it started out, it's moved on to also now sell devices like the Kindle and Fire tablets. It also has a segment in the brick space through, like, for example, Whole Foods Market, Amazon Fresh, there's also Amazon Go. And another fairly well-known segment for Amazon is the cloud business. It's definitely been a leader in that space. So these are some of the primary segments where Amazon transacts its business from. Okay, so next, let's meet the jockey. And the CEO now is this gentleman called Andrew Jassy. He was educated at Harvard, and then went on to do his MBA. He joined Amazon as a marketing manager and primarily led their cloud business, which obviously was very profitable. The question around CEO, so he's new. So unlike Bezos with a long track record, so this guy is new, and really will have to see how he performs and where he takes Amazon and how Amazon does under his leadership. So overall, I think the jury is kind of out. So we'll have to see what his performance looks like going ahead. Okay, historical performance. Just take a note of the caveat. And so if we look at the 5-year trends, revenue earnings, cash, margins, pre-tax profit margins are a little light, but it's predominantly a retail, but even then it should be better than that. Return on equity, so all of those over a 5-year period are trending up. Debt is at 49.8, and that is trending down, which is actually a positive because you want this to be going down, so that's a good thing. But if we look at more recent trends, so look over the last 12 trading months or the last 18 months, we can see that there's actually a slowdown in revenue growth, and with that, earnings is coming down and cash is being used up through their various investments, and so that's also putting a pressure on the margins, etc. So while the long-term trend looks up, in the short term there's some headwinds for Amazon. If we look at the price earnings chart, so we can see the earnings has been coming down all this year, but they're projected to continue to go down and then start to make the turn in the next year. And so we can see how prices followed earnings, and most likely it's getting to an interesting zone, and we'll see what the price targets tell us. So let's move on. And before we do that, take a quick look at the 5-year picture. So if we look at 5-year annual returns, so 2016 to 2021, the return was 18.54%, so well ahead of the market averages. And then if we look at 5-year trailing, so 5 years from the date yesterday going backwards, it's because of this pullback correction. So the returns have come in quite a bit, down to 11.53. So that looks in line with long-term market averages. Obviously, this is handsomely outperforming the long-term market averages. Okay, so let's move on to projected performances. And if we look at sales and earnings per share this time, so we can see sales are still moving up. It's the growth that's slowed down, and the earnings came down considerably from the prior year. And so this is for the current year, 2022, and this is looking forward out to 2023. So it starts to recover by the end of next year, but in the short term, earnings revisions is pointing down. So the analysts are looking at the business and reducing what their expectations of earnings looks like. And if we look at recommendations, so these are analyst sentiments in a way. Out of 37 analysts, 30 of them had strong buys, and 1 was a strong sell. So that skews it to the buy side. The average recommendation of 1.26. So the closer to 1, the higher the recommendation, or the stronger the recommendation is on the buy side. Then if we look at some of the price targets, so I'll cut through several targets here. For the current year, 2022, the target is between 91 and 130. When I did this, it was at the low end, and certainly the price has been slightly below 90, it's been in the 80s over the last couple of weeks. And then looking out to the end of next year, about looking around 141, a couple of years out, 168, and then 5-year projection is about 225. And from today's price, which is today it's up about $100 share price. So you're looking at quite an upside if these price targets are met. Valuations. So I ran the 3 normal valuations that I run. I added a 4th, which we'll talk in slightly later in the slide when we get to this position. So I'll leave that one for then. Both the valuations, so these were the ranges: 60 to 84, 84, 67.5. And so they're not too far out from each other. So there's some correlation there. Okay, look at tailwinds and headwinds on the kind of the bullish or the pro side. Amazon's global e-commerce leader. It's increasing subscriber base through its Prime offerings and subscriptions. It is hard to beat. All the competitors have to do price match with Amazon. Strategically, it's now moving away from online, and kind of also embracing offline retail. It's a leader in the cloud business segment, and then Amazon's been diversifying into devices as well, Kindle, Alexa, Echo, integrating with smart homes. And it has of late been more of an acquirer than relying on organic growth. So the company's still growing or adding new businesses. On the risk side or the con side, since Amazon is an international company in terms of its businesses, you have to be wary of the macro picture. So the currency risk is very real for Amazon. Prime looks like it may be saturated in the US domestic markets. And as I mentioned, it is now building on its strong e-commerce business and getting into brick structures like Amazon, Whole Foods and Amazon Fresh. It continues to invest in its logistics, so it's still building out some very mega large warehouses, and then all the logistics and the vans that go with it to support delivery. And being predominantly a retailer, it is subject to seasonality trends. So, like the sales periods, Christmas period, the Q4 is big for them. Okay, so on to disposition and deal or no deal time. So, yeah, so here we look at very price valuation models. Current price when I did the video was 97. It's a day passer, so the price did move up to about 101 today, or around 100 to 101. The valuation based on the valuations, so we come in at 70, 78. And then if we look at Yahoo's little valuation widget, so they have it overvalued. So it kind of matches with what we have here. Okay, so in terms of with the buy, hold, or sell, obviously this kind of leans the video's perspective in terms of what the data shows there, but certainly you may have different opinion. So I'd be interested. So leave a comment, your buyer, holder, seller, putting it on your watch list, or you're going to pass on this one, and be curious to see if you agree or disagree with the valuation and the targets shared here. And that valuation 4, which I mentioned, I was going to delay to later. So let's take a look at that. If I run a DCF based on cash to get the intrinsic value and stuff like that, so that comes in around about $12. And so that some companies, it's very hard to value them using discounted cash flow, because the business might be too early, it might be still growing, and some businesses don't lend themselves to the DCF valuation. But I wanted to cover that here because sometimes they will. Amazon is proving it isn't. So I also double checked this with a couple of other DCF published numbers on the website, on the internet. And so here's one that's fairly well known, Good Focus. So they came in at 1361, and some of the difference between this would be at when they ran this and how come this is and when I ran mine. So there's a little time lag, but I was pretty chuffed that it was fairly close to where they were. So I think can draw some confidence from that. Okay, so as we wrap up, the disclaimers on the left-hand side. So if you didn't read it earlier, please pause and read through that. And as always, if you haven't subscribed, please subscribe. If you have subscribed, thank you. If you liked the video, please click like and share with your family, friends, and peers. So that wraps it up for Amazon. On the whole, Amazon does have some short-term headwinds. It does look like it's still a richly valued company, but the prices come into a zone where certainly, depending on your risk profile and your portfolio of opportunities, you may consider doing a deeper dive and seeing if this fits your portfolio. Okay, so let's close with thank you for watching. Thank you for listening. I will see you on the next video. Goodbye.